Hey everyone, welcome back to Gold Predict. Today I'm going to share with you an advanced stacking technique to increase your precious metals holdings at a minimal cost. It has to do with playing the ratios, trading back and forth between silver and platinum and gold and various metals like that during the highs and the lows. It's a strategy you may want to consider. I started doing it a few years ago, and I think it has long-term potential. Now, here's the thing. This is something you're going to need to do for probably a prolonged period, 30, 40, 50, 60 years. If that sounds interesting to you, then hear me out. This is not financial advice, all right? But I think it's an interesting strategy. All right, thanks for listening. Here we go. All right. The first thing we need to cover is what precious metals one should buy or stay away from. This is from the APMEX uh, website. This is a U.S.-based precious metals dealer. And these are the IRS reportable items. Pretty much anything that is in the form of a bar, gold bars, silver bars, platinum, palladium, any of these bars and these ounces are going to be reported to the IRS once you sell them, and you'll get a 1099-B form come tax time. Gold Krugerrands, maple leaf, Mexican Anzas, and even 90% silver coins are all reportable to the IRS. A $1,000 face value, which is about, 720 ounces of silver, of pure silver, roughly. So if you sell any of these, they are required to report it to the IRS. So, in my opinion, I wouldn't buy anything on this list. All right, that's rule number one to do this strategy. All right, and now we're going to get into the nitty gritty of this thing. Okay, guys. So basically, at the heart of this strategy is it's just you're trading the ratios. At certain times, one metal is going to be extremely overvalued versus another, and vice versa. So currently, I have here a platinum to silver ratio chart. So back in 1980, silver hit around $50, I think, and the ratio fell to a low of 21 to 1. So basically, 21 ounces of silver would have got you 1 ounce of platinum. So at that point, platinum was really undervalued compared to silver. Then you fast forward here in the early 2000s, silver was really cheap and platinum was expensive. So here, 1 ounce of platinum would have got you 150 ounces of silver theoretically. Of course, there's premiums that are involved, but for just to show you how the theory works, hypothetically, let's say back here in 1980, you had 1,000 ounces of silver and you traded them in for platinum when the ratio was around 25 to 1. You would have received about 40 ounces of platinum. Then you fast forward 20 years. Like I said, this is a long strategy, but it didn't really cost you anything. You're just swapping these out at these extremes. You would have traded in. I know when he's going to get the exact top, so you can't expect to get 150, but let's say you got 120. So you take those 40 platinum coins and you trade them in when the ratio is about 120 to 1, and you would have received about 4,800 ounces of silver. So you'd have gone from 1,000 ounces of silver here, fast forward 23 years or whatever, and now you have 4,800 ounces, and it really didn't cost you much, like I said. So that's great. And now you'd probably be waiting to see if we ever get back down here again. Currently, the ratio is at 41 to 1. If it gets down to 25 to 1 or lower, I'm probably going to consider swapping out some of my silver for platinum, assuming that it'll go back up someday. So that's just the real quick gist of it. We're going to get into some more charts here, and I'll show you what I did. I started this strategy personally for myself a couple years ago. I traded in some gold. So let's get into that over there. I'll show you that. Okay. Right now, we're looking at the gold to platinum ratio. So I've started investing in gold around 2005, and platinum was always more expensive than gold for a long time. As a matter of fact, there were multiple times down here in 2001, 2004, 2008 where platinum was twice the price of gold. It was double the price of gold, and that's how I always understood it. And I was shocked in 2020 and late 2019 and 2021, 2022, and even 2023 when gold was double the price of platinum. Even on the platinum coin, the American Eagle coin, it has a $100 face value, and the gold Eagle has a $50 face value. So even the U.S. Mint, I guess, theoretically thinks that the price is double that of. So I couldn't take it anymore. So I sold some of my gold, I traded it in, and I got 60 ounces of Platinum Eagles. Now, full disclosure, I had to fork up a few dollars, I had a couple $1,000 because the premiums on the Platinum Eagles were so high. So for me to get exact 2 to 1, I had to fork over like $2,000 or $3,000, which wasn't a big deal to me because I didn't have any platinum at the time, and I wanted to diversify my portfolio. So basically, I turned 30 ounces of gold into 60 ounces of platinum. It cost me 2 or 3 grand. And now I'm waiting for the ratio to drop back. I don't know if it will, but I think it might. And if it goes back to the point where platinum is double the price of gold, I could take those 60 ounces theoretically and trade them into 120 ounces of gold. Or I think actually at that time we'll probably be near bull market peak, and I'll probably just sell them outright and buy real estate or something like that. But theoretically, if it works out, I would have turned 30 ounces of gold into 120 ounces of gold at a minimal cost. So that's the gist of it, real quick. I'm going to go over a couple more charts with you. I really like the platinum and the palladium chart. I think you'll find that exciting too. So if you're still with me, holy smokes, nice job. You're awesome. Let's get into the next chart. Hooah. Okay. Uh, wow. Look at this. This is the platinum to palladium ratio. As you can see, there are wild, wild swings. They're very similar metals in the way that they're used for industry, but there are 10x moves about once a decade in this thing. So uh, we had a major peak here in 1991. 10 years later, 2001, we had a bottom. Fast forward another 9 or 10 years, we had another peak around 2009. And then we had another 10-year drought down here. And 2020, it looks like it bottomed. And I think over the next however many years, probably by the change of the decade again, we're going to see it go back up to what I consider to be normal. Usually platinum is more valuable than palladium. But down here in 2020, 1 ounce of palladium would have bought you almost 3 ounces of platinum. It's insane. This thing is a wild swinger, guys. But unfortunately, there's not much you can do because the palladium market is so thin. You can't find any palladium coins on the market, and as I shared before, any bar form is going to be 1099B reportable to the IRS in the United States. So um, anything over, I think, 100 ounces of palladium is reported to the IRS if you sell it. So you're probably going to want to stay away from that. I wish the supply was better, but this would be a real. If you could use the ratio strategy between these two metals, you could about 10x your stack every couple decades. It's insane. So all right, we're going to finish this up here with the gold to silver ratio. We'll go check that out next. Okay, here we are. We're looking at the gold to silver ratio. So, I think most investors are familiar with the gold to silver ratio. Naturally occurring in the Earth's crust, silver is about 19 times more plentiful than gold is. I think today, as far as the annual mining, I think there's about 10 times more silver that is mined every year versus gold. But I mean, gold and silver have been money for thousands and thousands of years. I think they stopped using it in 1965 here in the United States. Silver is money. Gold, Nixon closed the window in 1971. But as far as old money, back here it says the Roman Empire officially set the ratio, the gold to silver ratio, 12 to 1, which is pretty normal, I believe. A 15 to 1 is average, I think. It reached a 14 to 1 ratio in Venice around the year 1305, and it remained at that level until about 1330. It fell to 10 to 1 around the year 1350, and as low as 9 to 1 in some places across Europe before it climbed back up to 12 to 1 ratio in the 1450s. The U.S. government fixed the ratio at 15 to 1 during the Coinage Act of 1792. So I think 15 to 1, 20 to 1 is a pretty normal gold to silver ratio. Today, it is at 80 to 1. 81 to 1 or whatever. And it reached almost 120 to 1 back in COVID during the COVID spike of 2020. The lowest we have here is about 17 to 1. I was kind of surprised watching the peak in 2010, 2011. I was really surprised that we only got down to a 32 to 1. I was calling for it to get much lower just because, naturally speaking, I think that's where it should be. So by the end of this decade, I am guessing that we're going to see probably a 20 to 1 ratio, but I wouldn't be surprised if we reached a 15 to 1. And some people are calling for even a 10 to 1 ratio by the time this all ends. I'm not sure about the 10 to 1, but at a minimum, I think we'll see a 20 to 1 ratio. And you know, that's reasonable in my opinion. So, what do you guys think? I hope so. But, all right. Thanks for listening. That's going to be enough for today. Hope everyone's doing well. God bless. I love you. And thanks for watching the video. Bye bye.